All right, investors, we've done Ford, we've done GM, we've done Tesla, TSLA. Now it's time to do Stellantis, STLA. Now, for those of you who don't know, Stellantis is a holding company. It is the holder of many brands around the globe. It's a global company like GM. I think most of the brands are Italian. If we go into the Wikipedia here, we'll find out all of their brands. We have the Abarth. I know that Fiat has some Abarth like racing badge on it. Alfa Romeo, that's a pretty popular one. Chrysler in the United States. Citroën, sorry if I'm pronouncing some of those wrong, but especially the French, my French is super weak. We got Dodge in the United States, DS Automobiles, Fiat Professional, Jeep, Lancia, Maserati, Mopar, Opel, Peugeot, Ram, and I don't know how to pronounce that. Never heard of it, but it's the oldest brand out here. So this is just another conglomerate, kind of like Daimler is with the Mercedes and Volkswagen Group and whatnot. They just own a bunch of brands and they try to synergize. And what a synergy this company actually has. We're going to go through the numbers. So first, warnings. Before we get into this, number one warning is that you've seen no edit so far. This is going to be a straight conversation. So buckle up, get a drink, and let's continue this. All right. Warning number two. It's a foreign company. It's not based in the United States. Okay. It's based in Netherlands, I believe, and so if you do invest in the company, you will receive a fat dividend every once in a while. But make sure that first of all, you're aware of two things. One, I think be aware of any foreign taxes that you may have to pay on those dividends. And two, make sure that you know what an ADR is, American Depository Receipt. Now, this is not going to be a course on foreign company investing, but just know that in general, foreign companies trade at less of a premium than United States companies, especially for American investors. There's another thing I have to mention before we continue here is that foreign currency risk. So whenever you're investing in foreign companies, there's a foreign currency risk. They denominate their accounting and everything else about the company in euros, right? Since it's based in Europe. So you have to be aware of the currency conversions movements. And if you're a really sophisticated investor, you could try to hedge those. Now, with all those warnings aside, and there's another warning. Sorry, I gotta get these out. Of course, none of this is investing advice. Okay, if you're interested in the GM, the Ford, and the Tesla videos, I'll try to link them down below so you can check them out. This is going to be a kind of an in-depth dive here. I'm going to explore things like resiliency of the company, the growth potential, the valuation, and try to figure out and ask the question if this company is worth the price and if it's worth the buy. So that's what hopefully we're going to be answering by the end of it. Now, first thing is first, the website, guys. This should give you a good look of what this company is all about. The front and center is the electric Ram. Now, what I find curious, by the way, let's back up just one step, is that they have Ram here listed as a separate brand from Dodge. I don't know when this separation happened. Is this like, did they make just like their electric truck brand a separate category or something like that? Like, what is going on with that? I just want to know. If you know that, leave it in the comments. Like, what happened here? Why are they separated? Also, I see Maserati in here. This is not, going to be an analysis on mergers and acquisitions, but I thought Maserati and Ferrari were married at the hip. So if somebody knows more intricately about the relationship there, I know that they have some kind of like open contracts of cooperation or something. So maybe perhaps they are still using the engines of Ferrari. But, I like Ferraris, I like Maserati, so I just want to know what's going on there. But moving on, let's take a look at something that I know something about and I can read, which is the numbers of the company. We have out in front of us a max chart of Stellantis, and it looks like it's on a steady trend up. This is since 2011. Even more recently, it looks like the trend is pretty good on the 1-year chart. So from a chart perspective, we know that this company is not falling. Okay. Even as of recent month, it's starting to trend up or continue to trend up. So that's not really an issue with the company. From a quick overview perspective here, two things really stick out to me. Obviously the PE ratio extremely low, so we have to find out why that is. And then a forward PE is also low. And then, of course, the dividend is enormous. Enormous. That's a new word. So 6.21%. I know it's not consistent, so we'll look at that in a minute. I like to look at this little window here before I get into the numbers to try to figure out how the company has been moving. Now, in 2020, this is important. They had a big merger, right? They had a big merger in 2020 where they acquired some more brands, and from what it looks like in the figures, the efficiencies and the synergies between all the different brands have worked out really, really well because their numbers just look fantastic. Before I even go into it, I'm just going to tell you right now. First, we're looking at financials. Okay. Unfortunately, stockanalysis.com does not let me go into quarterly very well. It kind of empties out. So we're just going to stick with the annual figures for right now. So revenue-wise, since the merger here, you can see what's going on here. 2021, right? $149 billion, almost $150 billion. And 2022, almost $180 billion in revenue. So this mix of brands and companies has done really well so far to boost the revenue. But of course, the cost of revenue also went up, but not as much as you would think to generate that revenue. So the company is doing well. So other numbers I like to look here is, of course, net income. I mean, that's kind of the most important thing for a company. So it looks like in previous years, 2013, 14, 15, 16 through 19, not too good. I mean, the company was definitely profitable and stayed profitable for all these years, so kudos to them. But the real big jump in profitability came with the increased revenue. So it looks like 14 billion of total earnings and 16.8 billion in 2021 and 2022. I like the look of that. I mean, look at this earnings increase. They're leaving the previous years in the dust. So that's very impressive. Very impressive. When I was looking at this company, I was very impressed. So shares outstanding. This is actually not too bad for such a big merger. It looks like, the shares outstanding almost doubled, or at least increased by 60% or something like that. And that's not too bad. I mean, what that means is that your ownership in the company has decreased by 60%. I mean, by roughly half, almost half. But that's not too bad because you're getting a bunch of companies, right? They probably issued a lot of these shares to pay for their acquisitions. If you know more details about exactly how the shares were used, you can write a comment below, but it's not really that important. And the important is they issued shares to improve the business, and the business is looking great. Dividend per share, it varies, obviously. It looks like 2021, there was quite a bit of dividend. We'll take a look at that in more detail in a second. The big figures that really impressed me here is the margins. So gross margin around 20%, operating margin around 10%, profit margin at around 9%. This is huge. A profit margin of 9% for a car maker? Are you kidding me? What? I mean, yes, all right, if you're looking at Tesla, they have like 15-20% profit margin, but they're an outlier. This is like a legacy, basically, car company. Did you see when these brands were formed in like 1850, 1900, right? So this is kind of a legacy brand company conglomerate. Free cash flow margin. All right, let's move on. Let's take a look at the statistics next. So enterprise value is 32.28, but the market cap, guys, is 57.37. So that is a difference of, I can't even do the math, of what, 25 billion? You know what that means, right? They have 25 billion in the bank in cash. They're just sitting on 25 billion, which is like the entire value of the company. All right? Like imagine, this is what it means, right? Imagine that Tesla was sitting on the same proportion of cash as Stellantis. And Tesla's market cap is like 500 billion, half a trillion. Imagine Tesla having half a trill in the bank. Okay? Half a trill in the bank. Okay? That's like more than Apple and Berkshire Hathaway combined or something. You know, in a ratio. So, anyways, that's a lot of cash to be had. So the survivability of this company, just based on the cash in the bank, is already like A+, top notch. Okay, income statement. Okay, income of 18 billion. That's fine. That's fine. Balance sheet. So here's the net cash, right? Here's the 25.09 billion in net cash. So cash equivalent is 54 billion. Total debt, 29 billion. 29 billion. So the ratios. EV over earnings, 1.81. Unbelievable. EV over sales, 0.17. That's like, EV over sales is just, it's better than VIPS, better than VIP shops, which was, well, not better, but it was like 0.12 or something like that. This is some crazy EV to sales. EV means enterprise value, basically excluding the cash that's sitting on the company's balance sheet. EV to sales of 0.17. That's ridiculous. EV to earnings 1.8. Craziness. Ridiculous craziness. EV to free cash flow. This is a good metric right here. 2.64. I don't know, guys. 2.64 free cash flow. Okay. I'm trying to buy Apple with like 22 or something EV to free cash. That's even higher. I don't even know what it is. Let's check it out. What is Apple's EV to free cash flow? Look at that, 25.5. That's so much higher. Look at this. EV to earnings, 26. Remember what it was for Stellantis? 1.8. EV to sales, 6.42 for Apple. Do you remember what it was for Stellantis? 0.18. Hello. Let's compare it to our own conglomerate here, GM. I made a video on GM not too long ago. Let's figure out what's going on here with the EV metrics. EV to earnings for GM, 11. Dude, that's like 8 times higher. EV to sales, 0.63. It's like 5 times higher or something. Ridiculous. EV to cash flow, 11. All right. Okay. And not to mention, the cash positions of these companies. All right, let's click off GM. Let's continue with Stellantis here. So far, extremely impressive. I ain't gonna lie. Let's continue, okay? Let's continue here. Let's see what else we can learn, right? How about this right here? We're gonna go into the financials, balance sheet, and look at this beautiful trajectory. Let me find it real quick. Net cash over debt. Boom. You guys seen this? Let me see. Yeah, you should be seeing it all right. Do you see how it's shifting from negative to positive, and it continues to grow like almost exponentially? Are you seeing this? Are you seeing what I'm seeing? What kind of synergies is this company like finding? This is ridiculous. It's probably the most efficient car maker other than Tesla that I've seen so far. All right. It's time to go a little bit deeper. Let's see what we got. What can we find next? What can we find next? Oh yeah, the dividend. Before we go into the 20F or whatever, we're gonna go into the dividend. Look at this. So 6.27 yield, which may or may not be calculated correctly, doesn't matter. It's high, it's variable, it's high dividend. Payout ratio around 20%, and I read in their 20F that they're trying to keep their dividend payout ratio at around 20 to 25% or something like that. So that's how good. Dividend growth, ignore that because it changes a lot. Over here, there's a brief history of ex-dividend dates and cash amounts. The dividends are paid out in euros and they're converted to dollars, etc. So make sure you're aware of conversion rates and tax, etc. This is a brief chart of their dividend issuance all the way back to 2019. Obviously, 2020 is absent here because 2020. That's why. Moving on. So solid dividend. Solid dividend. Unbelievable valuation so far. What else can we find? We can try to look into the 20F, okay, filings. So the 20F is basically an annual report that foreign companies have to file in order to be able to be traded in the United States. Okay, so let's take a look at some figures, shall we? First of all, they do have a lot of employees. I'm just going to be scrolling a lot. For those of you who are on phones, I apologize. Texts are really small, so I'm just going to try to walk you through of what we're seeing here. And for those of you on the the Xbox, the desktop, I can English, I swear. You can probably read a lot of these numbers pretty well. I've already browsed through it, but for the most part, I'm going to be browsing through with you. So first of all, I noticed that they have a lot of employees. A lot of employees is sometimes kind of a liability. So, but they are a very global company. They need all these employees in different factories around the world. They have production facilities almost everywhere, even Australia. It's craziness. So let's take a look at some of the breakdown here in sales. So I believe these are vehicle sales and estimated market share in North America. Okay, so US 1,500. So these are they should be in thousands of units. So 1.5 million. Okay, 1.5 million units in the United States, or 11% of the market share of total vehicles sold. That's not bad. I mean, that's in line with GM and Ford. That's pretty good. It is a little bit of a decrease though from last year, but that's not to worry. They've been hovering around this figure since 2020. Canada, 169,000. Mexico, 74. Okay, let's see what else we can learn about this company. A following table presents estimated new vehicle market share information for Stellantis and our principal competitors in the US, our largest market in the United States, in the North America segment. Okay, so here we are compared to the market shares of other automakers, so GM, Toyota, Ford, and then Stellantis. So they're actually really competitive. I noticed that they launched Alfa Romeos, right, in America, which was new. Alfa Romeo is actually a pretty popular brand, or well known, let's just say, a brand in Europe. But it's kind of new to Americans, so it was interesting to see, a whole entire line of cars. Well, an entire line, more like one sedan and one SUV. But still, it was cool to see that. But they do have, of course, Dodge and all those. It's ahead of Hyundai and Honda, Stellantis and Nissan. So that's pretty good. Okay. Following table presents Stellantis vehicle sales and market share in enlarged Europe segments of the period presented. So let's see. They basically have good sales in all countries, all the major European countries. 2.5 million units, basically. Let's see, what else can we learn? This is for market share, I'm presuming. So pretty good, 20%. Volkswagen is at 23%. Stellantis is at 20%. So basically, they've got pretty good market share in many areas, including the most major areas in the world. They're a very global company. Look at this, 32% in Turkey. Morocco's 20%. All right. That's pretty good. Egypt 16.5%. These are good figures. Big company. Middle East, Brazil, Argentina, market shares are huge. So Stellantis, big. Brazil, they're number one. Look at 32.9% market share. So the size of this company is really, really good. Market share in Asian countries not that good. But I'm sure they'll do well. I mean, they do have, I think, one big factory in China. But their division there is good. I'm sure they'll break through eventually. There are many vehicle makers in China, though, so it's going to be tough there. It's definitely going to be tough. All right. I want to see some assets and liabilities here, so we can talk about that. Because when I was looking through assets and liabilities in the stockanalysis.com figures, things were looking really good. However, the 20Fs, I'm not actually that familiar with the structures here. So we'll have to try to find a shortened balance sheet. Oh, this is a long 20F. We may have to go back to stockanalysis.com. Okay, we'll just go back and look at them there. All right, and we'll infer the equity from those figures. Yeah, this is way too long for me. Okay, so we're gonna go to the financials. We're going to go to balance sheet, and we're gonna read through the total assets. Okay, total assets of $186 billion. We're gonna go to total liabilities. All right. Total liabilities is 113. So 86 minus 113 is 73 billion of shareholder equity. 73 billion. Okay? So this company, 73 billion, is trading just a little bit over the market cap. All right, by 26 billion, if I'm doing the math correct. So it's a $26 billion option on what this company is going to be doing on top of its asset base. And I would frankly say that from what I've seen so far, that's a pretty damn good deal. $26 billion option. When I was looking at Tesla, if you check out the previous video, you know what Tesla's option is worth? $500 billion. $500 billion. Okay. And this company is, I don't know how many times its size, especially on vehicle sales and all that. And efficiency metrics, it's probably close to it. We saw the profit margin was around 9%. Tesla's probably 15. Let me double check real quick. Tesla profit margin. Right here. Yeah, 15%. Not bad, Tesla. 15%. Let's go right here. The margins. Okay, gross 25, operating pre-tax profit 15. So not bad. So really close to Tesla. But honestly, 9% is not bad for a car company. Let's see what Ford is, all right? Ford is probably going to be atrocious. I went over this in the other videos, but I just want to do some quick comparisons here. So profit margin for Ford, yeah, look at this. Ford is not even profitable. In 2021, it reached 13, which is the highest it's ever been. It's negative 1.25 in 2022 this far. Ridiculous. Okay. Okay, so now, next on the chopping block. Oh, I forgot to show you, but that's alright. Next on the chopping block. Conclusion. Alright. So, virtually every metric of the company looks exemplary. For this kind of company, there's a $26 billion option on everything the company's going to do outside its asset base. If there is a recession, so we have to judge the company on resiliency, this is basically a slam dunk. All right, this company will survive any downturn imaginable that we've had thus far because of its massive cash position. I mean, I tried to, make some kind of comparison as to how massive their cash position actually is, but it's hard to say that. I mean, they have a ton of cash for what they need. Okay, let me see the cost of revenue for the year again, and so we can get a better idea. Okay, cost of revenue 144. All right. Not bad, but they can really minimize that. Okay, so they could basically survive an entire year of selling 0 vehicles and still paying everybody's salary. That's really impressive. So I'm not worried about this company going under or being bankrupt at all. The only things that I worry about with this company is one, the jurisdiction. Europe is a little bit more known to having, how do I say, more of a chokehold on its companies. So the profitability could be impaired. There's more political risk, I think, from my personal opinion. You could disagree with me on this, but I think there's more political risk in Europe when it comes to regulation, things like that. I saw some stuff about in their 20F when I was reading through it about some kind of 50% electric requirement or something. If you know the laws and rules there in the auto companies, please let's comment below so I know and other people know as well. But I do think just in general, from a high point of view, I think Europe is a bit more stringent when it comes to the rules, especially in big companies with mass production like automakers. So jurisdiction knocked down, also foreign tax knocked down, and currency risk knocked down. So that's 3 points that are working against just the sheer fact of where this company is listed. However, I think those risks are far outweighed by how smooth the company looks to be running, how profitable it is, how resilient it is, how well they're managing their cash, its growth trajectory, its proven ability to synergize new acquisitions into the company, its selection of acquisitions. And so I'm thinking, based on all these metrics, that the management team there knows exactly what they're doing, they're executing, and I'm certainly impressed. When it comes to car makers, this would be one to own. At the current price, is it a good buy? I mean, yes. Considering, I wouldn't make it my number one choice for stocks to buy, period. But if I was running a portfolio of, let's say, 10 stocks or something, then yeah, it would be on the list. It'd definitely be on the list when it comes to, if I wanted a car maker in my portfolio, I would choose this one. I haven't looked at Daimler yet, but out of the companies that I've looked so far, this was by far number one. All right, so this would probably be my first thumbs up. Like, that's okay to own a company. You may want to get better pricing. I don't know, maybe sell some put options or something like that. I mean, you had a really nice day today. So in the long scheme of things, you're planning to own this company for a long time. It does matter what your entrance point is. It looks like, let's go back to the chart here. We'll go to year to date. I mean, if you, actually, let's back up a little bit. Let me show you. I mean, if you caught it somewhere in here in the $12 to $13 range, you're balling. But even at this elevated price at 18.4, it still looks like it's worth it on the numbers, honestly. So you could just enter with a small amount, buy in if it falls, or keep buying as it goes up. Again, this is not a stock recommendation. This is like what I would do. Okay, my opinion. You must, you are responsible for your own risks out there, and make sure you do your own due diligence. And if you're confused about anything, ask a professional financial advisor, a licensed one, from a good reputable firm. All right, not some Joe Schmo firm that's on the sidelines. You pay what you get for usually with advisors. So anyways, I'm not an advisor. I'm not promoting any advisors. I don't like advisors necessarily. But I do want to say that because a lot of people fall into the trap of listening to people like me on YouTube, where we're not qualified to give professional advice or good advice. All right. I'm not qualified. I'm just an investor. Okay. An individual investor that's trying to do his own due diligence and share his thoughts on the interwebs for people's entertainment, enjoyment, and perhaps addition of perspective. So it's a serious thing. So make sure you're not making rash decisions, and educate yourself, and or dip your feet in slowly so we don't get burned by the stock market and lose everything like many have in the last couple of years. So serious addition here at the end. All right. Okay, that was, Stellantis. That was a big one. It's a tough one. It's a long video. Watch the other ones if you want on the car makers, and maybe I'll make one on Daimler next. I've been doing company reviews lately, a lot of them, but also run a public account, and I share some trades with, whoever wants to watch. I started this channel kind of like a self-journal video log. So if you want to follow along with that, that's cool. If you have any questions, ask them. I'm usually in the chats answering things. Comments, let me know why I'm wrong, let me know why I'm right, or point me to some sources. I always want to get better and educate myself. Or you can give me suggestions as to what kind of company you'd want me to look at next. All right, that's it for now. Mic drop.